What is good, guys? It's Ray J back with another video. And this one, I want to break down what's going on with the overall market and talk about some big news that just came out. I'm going to talk about why on earth this rally that we saw for today in the stock market was quite sketchy. It was very suspicious. And I'm going to break down why I believe that and what happened with the news that just came out that's going to affect Tesla in the markets. Now, before I break anything down, all this information, though, before I get into any more details, I want to just mention a couple of things. I am firstly not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link down below and deposit $100 into the account, you're guaranteed up to 5 free stocks. The offer ends in 5 days, so check it out before they run out. Anyways, let's talk about what happened to the markets. So when it comes to the markets, going back to Thursday, we had Jerome Powell giving his speech, and he caused the whole market to slow down, not to mention the 30-year auction coming out. We had two negative catalysts that caused the market to continue to sell off. Jerome Powell said that the Fed could raise rates again. The Fed has more work to do, and they're not even close to their 2% target for inflation. So that caused the market to sell off very hard, and this made things very, very complicated for today. Then today came, today's Friday, right? The day after. The economic data was bearish for the markets. The Michigan Consumer Sentiment Report, at least technically on paper, it was. This was negative for the markets. And yet, the market didn't care. It just continued to rip. We saw Tesla rip. We saw SPY continue to rip to the upside. The market just ripped like there is no tomorrow. And a lot of people turned very bullish. We saw the buyers stepping in up here in the 440s. And this is where things became very suspicious. So the market kept going. We got a strong close. SPY closed at 440.61, just under 441. Tesla closed at 214. We got some nice closes, and the market held up very, very nicely. Now, when this happened, this was awesome to witness. It was amazing, and a lot of people turned very, very excited. However, I must warn you all that it does not make a whole lot of sense to turn way too bullish at levels like these because something very big happened. The market closed at such a high level. People became very excited, and then this news came out right after market close. Okay. The news said that Moody just downgraded the US. The US outlook is now negative, saying that there's likely going to be higher interest rates and more deficits, and they've cut their outlook. This is big news. They used to give the US a stable outlook. Now they're giving the US a negative outlook. And this is very, very important when it comes to like global investors and etc. So how interesting was that? They pumped the market hard. Okay, they could have done this just to get retail to start buying, while institutions started selling. Institutions were selling to retail. Institutions were shorting up here, most likely, and they waited for the market to close, and then they released the news. You guys see how interesting that is? Okay, do you guys see how suspicious that is? They waited for market to close to release this news. And this news could cause the market to sink big. How interesting is that? Now, why is this important? What does this have to do with anything? What does this have to do with Tesla? Is probably what you're asking yourself. And the answer comes from credit in itself and also the psychological effect of this. So, here in the US, we use credit scores to basically measure basically the risks for the lenders, especially when they're trying to take on more risk. And that's going to be very important. The US has a credit rating, which in turn is going to be reflecting the fiscal stability of the government. It's going to impact interest rates for the government securities, and global investors look at all these different things. So, this is important because global investors look at the US as a safe haven. And when you get downgrades like this is nothing but bad news for them. So they're pointing out that the nation's fiscal strength is once again at risk. They're saying that not only did they downgrade the US earlier this year, which led to a sell off, I'm sure you guys remember that. The news came out that they downgraded the US from its previous credit rating. This led to a sell off for equities. This affected Tesla and the whole markets. And now they're saying, and I quote, in the context of higher interest rates without effective fiscal policy measures to reduce government spending and increase revenues, the agency said, Moody expects that the US's fiscal deficits will remain very large, significantly weakening the debt affordability. This is huge, okay? The fact that this came out after market close is just big. And they're saying that there is going to be more positive growth for the US, but once again, the debt affordability is still something that's a concern for them. So, once again, this is very big. They also pointed out the possible government shutdown and some negative news like that. Why is this important? It's going to affect the lending of the US and who's lending here. It's going to affect global investors and how they view the US. And security from the US is starting to decline just slightly, which is hurting the US's ratings, which is big news from the past. The US was very secure to be investing in for decades, right? At least amongst many investors, at least on paper, right? I'm just talking about this based off how like the Fed sees it, based off how other investors see it. And now things are shifting. Things are really starting to shift as we're starting to see, these changes when we're seeing these other countries shifting away from the U.S. dollar, and also now we're getting these negative ratings. So things are changing in the overall global scale of things. This is big news. It's going to affect investments here in the U.S., and this is having a negative effect on the stock market so far. You just want to be very careful when we see rallies like this. And we want to be very careful when it comes to how this could affect the markets. On SPY, we have a triple bearish divergence that has developed. And with this triple bearish divergence, there could be a risk of downside now if we end up continuing to drop. And this is going to affect Tesla. The market was very fearful in the past. It became less fearful as the market has rallied. We came very close to neutral, and now we're back to becoming more fearful. Market momentum was greedy at one point. Now it's slowing down, and we're continuing to see negative catalysts. So, what are some levels to watch for on these different tickers, and what's going on with the charts? NVIDIA, QQQ, SPY, these things have negative divergences. They could start selling off, but we want to be watching support just to be safe. So I'm going to break down a couple of levels and just be very brief with this. So as far as Tesla goes, this is bad news for Tesla. If the whole market ends up sinking, the algorithms are going to take over and slow it down a bit. On top of that, we have some more news coming out. We're going to be watching these levels to see how it goes, and you just want to be very careful with this news. So if Tesla ends up selling off, you're going to be watching 212. We want to see it hold 212. If we lose it, 210 is going to be a level to watch for 208 and then 207.5. Sorry, not 208, 209, then 207.5, followed by 205 below that. If we end up breaking, if we're bullish, you want to see Tesla try to get above 215, then 216.8, and then 218 to 220. This, in my opinion, is more likely to cause downside. So you just want to be very careful. And there's an increased probability of downside because of this news. The last time this news came out, the market sank a lot more. So you just want to be careful. Now, on top of this, I just want to call out something on SPY. SPY left an unfilled gap today around 433. So we have a gap down to 433. We have a gap down at 430. We have more gaps in the 420s. This is risky. So you just want to be very careful. We have a triple bearish divergence on the chart, also on many other charts, and we're going to be watching this support. So going back, to the last couple of months, we have this historical support back here on SPY. You guys could see, historical resistance up here, not support, resistance up here on SPY, right here, and we came very close to its today. We didn't quite tag it yet, but we came very close. So if we're bullish, let's just say somehow the market's illogical and the market tries pumping. If SPY breaks 442, we're going to turn bullish. We're going to see 444, then a rejection. If we're bearish, we're going to start sinking from here. Either we kind of like tag this trend line and then reject, or we just reject from here. We're going to be watching 438, 437.5, 436.5, and then 435. If we lose 435, we're going to sink down to fill the gap at 433. That's also going to correlate with where this historical support is, this green trend line. So there is a risk of downside, guys. I'm going to be super blunt and honest. This news is not great news, and it's going to affect global investors across the globe. All right. So we're more likely to see the downside. This is not good news, and it's more probable that this bearish divergence plays out. But just to be safe, let's see if SPY truly breaks below 439 and starts sinking to like 438, 437.5, and etc. Let's wait and see first before we make any more claims. All right, so we'll be waiting to see how it goes. The market has a risk of downside now after this negative news. And this rally, although it was beautiful, although it was very fun to witness, You want to be careful when seeing the market rally like this. This is one of the things I warned everyone about earlier on. I wasn't expecting it to pump this hard, but it happened. And this whole move could have been a trap because now these institutions could gap the market down and screw over the people who are buying up here. They could do it if they want. They have a lot of power, and there's so much manipulation dictating this market. The market pumped like crazy. There was no bad news. As soon as the close happened, a few minutes after close, the bad news came out. You guys see how the market works? And there's always the possibility institutions were the ones pushing the market up, basically to trap many investors, to trick them, get them to buy up here while they sell, while they start shorting up here. And then they release the news right after. It was all part of their game. And this could be part of why the market pumped the way it did, because they knew this was going to happen. They pumped it up so that they would get good short entries, and they knew exactly what they were doing. They also pumped it up because it benefited the market makers, right? The market makers had a lot of puts expiring, so they just wanted to screw them over first and then switch over starting during the next week coming up. So we'll wait and see how it goes. But that's it for now. We're going to be watching some more things about Tesla. We'll talk more about Tesla in my later video. But for now, I just want to end it from here because it's a Friday and the weekend is coming. Thank you all so much for listening. Have a great day, and I'll see you guys in the next one. Thanks again, and peace out.